good evening. Ira Epstein of Linn and Associates with your metal market update. And here we are now on Thursday, and we're at the 10th of June, 2011, 90 degrees or so in Chicago. And remember, this is June 10th. I'm scared as to what summer's going to bring, which is what, June 20th. But we're at about 5:15 in the evening. Metal markets are up, so we're starting to get some good action. Today was the CPI day, and it was another sweet number. And what I mean by that is it's there. We had the core number, when you look at it, the headline, 5%. But the market was looking for that. Number two, we know that we're in that transitionary phase, and when you go against a year ago and other months, you're going to get these big jumps as you come out of a pandemic. It changes as you go over time. You don't have to believe me. Just look at what bonds and notes are doing. If I were wrong, and if it was a hot number and driving inflation really up, you would see yields on the 10-year note rise. Instead, they have gone from 1.7 all the way down today to under 1.44, and they're trading right now in that general range. So it's not just me. Dollar index pretty stable against a host of currencies, and because you're not rising interest rates, you're probably going to see a bit of a bid come into the gold and the silver market. And speaking of the gold, here we are going into Thursday, and the market is up 1.25%. We're up $23 for the week. Still haven't broken away from this pattern that I pointed out to you at the beginning of June when you made that higher high, lower low, and got caught in this sideways action. That's what you're still caught in. The pattern: lower highs, possibly higher lows now. In fact, that's what you've got. So are you trending? No. You've paused the downtrend that you were in. Where's the support of the market? Well, should I tell you? The 18-day average and that first challenge of the 200-day that we were talking about here. That's exactly what's taking place. Lower highs, higher lows, bias up. The Bollinger Band resistance is going to flatten itself out now. So it's looking at the volatility, and instead of coming in even further, it seems to now just be drifting. So that 19-15-15 area is going to be the resistance zone. And momentum, you had gotten the market embedded, lost it, you became overbought, you've totally worked that off. Now the question is, what's next? I'm going to give you that. Always be careful when you see these bands narrowing in this much and going sideways. It often leads to a period of consolidation and churning. You've been in that. Now the market's doing it in even a tighter band. It's rejecting this number, and now it's giving you some other numbers to look at. When you get to the gold-silver ratio using August gold versus July silver, well, prices are now at 67.58, starting to penetrate that 67.71 18-day average of closes, which means silver is looking better than gold. And here you go. Higher lows and a higher high. Bullish. Resistance, 28.38.5, I'd say. Support right here at 27.96. The risk is still pretty big if you're going to be a buyer there, because you'd have to risk down to 27.47 roughly, and that is an awful lot to risk from 96. It's still going to be about $48 or so, 48 cents, and at $50 a cent on a full contract, you're well over $2,000 risk. I'll let somebody else handle that, but now for the moment at least, I'm in the bull camp out of the bear camp in the market. In the copper market, we continue to see China doing all that it can to put pressure on speculators and drop the market. They're now talking of releasing some of the copper stockpiles that they had amassed during the pandemic, because they were on a buying spree because they didn't know what the pandemic would bring. The bad news, and there is bad news, is that there's another outbreak now of this new, is it the Delta version that they keep calling it, in China, and they're going back into some lockdowns, and other countries are seeing that too. I don't know if the vaccines are working, not working, but it's something you keep your eye on, and that's giving you this pressure. You're oversold, market hanging here. Any close over the 456 level negates all this bearishness, and I don't think you've got much downside under the 441.35 level unless something in COVID real important comes out. In the platinum market, you had gotten down, as you can see, here's today, to another challenge of the lower Bollinger Band. I'm expecting the same thing like here. A solid bounce away from it. You're already getting that in an oversold condition, but the trend is down. When you come to the palladium market, lower highs, lower lows. I so wanted it to get down today to that Bollinger Band and just kiss it and then turn back up. Well, you're still in a downtrend, didn't do that. Are we oversold? Well, these numbers are not under 30, and you have to be under 30 to be oversold. You're not there. Just a downtrend. The dollar, how do you trade when you get that narrow of the difference between the lower Bollinger Band and the upper one? You don't. This is what I call that famous psychiatry trade. Where's my psychiatrist number? Therapist, whatever you want to call it. I need help. I'm buying, it's not going up. I'm selling, it's not going down. I'm getting caught back and forth, and momentum's flat. Why be involved? That's what I'd say. Ethereum, well, got to tell you, today's the first day that I ever put out a trade recommendation for my subscribers. I did it in Bitcoin, and I used that new macro or micro contract that they've got. We got a great fill. I'm not going to tell you what it is. You got to be a subscriber to know, but I was jumping up and down. First trade that I got off on it. The pattern here is still one of bearishness, but you're bringing in all the Bollinger Band to it, so you got to pay good attention. You're starting to get that sideways action. If you drop, I'd look for big support at 22, 24, let's call it 50 just to make the number round. And if you get up and over 25, 42, is that 25 or 26? That number's 26.4250. You negate the downtrend going forward. So you're narrowing in the ranges, and that's going to get very interesting. You hear me talk over and over about what I do here, and you do know we have a charting course. And the charting course I've laid out with 54 chapters of videos. It's 8 hours long. It's not a race to finish it. You take your time, you go through the course, and I teach in a way that each chapter builds on the next chapter. You're going to get moving averages, slow stochastics, the way that I like to teach them. Then you're going to start learning, as you can see here, the Bollinger Bands. Now, this will be the basic part of Bollinger Bands. The enhanced Bollinger Band course is after you learn this part of it. Window envelopes. They are another all-important tool because you often don't hit that Bollinger Band. You'll hit a window envelope, which is a standard deviation from the 18-day average of closes, and it gives you resistance and support numbers. As I said, 54 videos, about 8 hours of that. I don't want it to be 54 hours. You're going to have access. It includes my full research for 30 days. You're going to have access to the morning subscriber video. You're going to have access to the charting software. You're going to have access to everything we do. To find out about it, and folks, it is not expensive, just go right here, www.iraepstein.com, into the word education. Education is where the courses are, or you can call my staff. They'll work with you. As soon as you sign up, you can start. And if you wanted to buy it and you don't want to start right now, we wait for you to tell us when you want to start. And away you go with it. Pretty simple. Look in your mailboxes. I sent everybody the invite to the new webinar that's going to be this coming Tuesday. Today's Thursday. This coming Tuesday at 12:30. You'll want to sign up because we're running out of space in them very fast. I'm Ira. You have a great day. I'll talk to you tomorrow.